Hello guys, welcome to my YouTube channel. In the previous session we have completed techniques of financial statements and the next unit is ratio analysis. But I am not going to explain ratio analysis because it is a too lengthy chapter and it has 30 formulas to learn. So I suggest you guys to learn theory from that chapter. So in this session I am going to explain funds flow analysis. So guys, let us start with introduction. Chapter 7, Funds Flow Analysis. The term funds has been defined and interpreted as financial resources of the company. The most acceptable meaning of funds means working capital. Flow of funds refers to changes in assets and liabilities which cause a change in working capital of the organization. In simple words, a fund flow statement is used to analyze changes in the financial position of a business when comparing two balance sheets and inflow and outflow of funds. Okay guys, now let us see the pro forma. First, statement of changes in working capital. Statement of changes in working capital, particulars, beginning of the year, end of the year, increase in working capital and decrease in working capital. So we have to know the simple formula here, that is whenever current assets increases there is an increase in working capital, and whenever current asset decreases there is a decrease in working capital, and whenever there is increase in current liabilities there is a decrease in working capital, and whenever current liability decreases there is an increase in working capital. So under current assets we have cash in hand, cash at bank, bills receivable, sundry debtors, closing stock, short-term investments, prepaid expenses, other current assets. And under current liabilities we have bills payable, and under current liabilities we have bills payable, sundry creditors, outstanding expenses, bank overdraft, short-term loan taken, proposed dividend, provision for tax and other current liabilities. So after calculating current assets and current liabilities we have to calculate working capital, and after calculating working capital we should calculate net increase or decrease in working capital. So guys, after calculating statements of changes in working capital, the next procedure is we have to calculate profit and loss account. So in profit and loss account we have two columns, one is debit side and one is credit side. So particulars amount and particulars amount. So in debit side we have depreciation, fixtures and intangible assets written off, appropriations of profit, loss on sale of fixed assets and investments, and dividends, provision for taxation, funds lost in operations, balance carried down, that is closing stock balance, and balance of profit and loss account. So in credit side we have balance borrowed down, that is the reserves and surplus balance or any other balance, and opening balance of profit and loss account, and profit on sale of fixed assets and investments, appreciation in value of fixed assets and investments, excess appropriations withdrawn, dividends received, funds from operations, that is a balancing figure, balance carried down, that is a closing stock balance of profit and loss account. So funds from operations means it is a profit and we will enter that entry in the profit and loss account credit side, and if funds lost from operations means it is a loss and we will enter that entry in the debit side of profit and loss account. So after calculating profit and loss account we have to calculate statements of sources and applications of funds for the year ended. So in sources account we will enter all issues and sales, and in the application side we will enter all payments and redemptions. So now we will see the pro forma for statements of sources and applications of funds for the year ended. So sources amount, applications amount. In sources side we have issues of share capital, issues of debentures, long-term loans raised, sales of long-term investments, and sale of fixed assets, receipts from partly paid shares called up, funds from operations, non-trading income, decrease in working capital. And in application side we have redemptions of redeemable preference shares, redemption of debentures, repayment of long-term loans. and purchase of fixed assets, purchase of long-term investments, funds lost in operations, non-trading expenses, payment of dividend, payment of tax, increase in working capital. And at the end of the problem of statements of sources and applications, so the balances of both sides should be equal, sources and applications should be equal, so that only the problem will be correct. Okay guys, today's session is over, and in the next session I will start with short problems and I will tell some important problems. So if you guys like my video, please subscribe my channel and share it to your friends, and if you have any doubts, please comment me in the comment box. Okay guys, see you in the next video. Have a nice day.